We're awaiting a possible big decision by the Federal Reserve when it comes to your money. Economists expect the Fed to shave a quarter point off of interest rates. So this would be the second cut this year and 2 months after the first one made in September. So if it happens, rates will go down to a range of about 4.5% to 4.75%. So we are watching the reaction to the Dow right now. There's the big board. Of course, we'll be watching that throughout the day as we get closer to Wall Street closing up. From the big board to the person with the big mind to explain it, CBS News business analyst Jill Schlesinger, you're helping to break it all down. What does this decision mean to our wallets, Jill?
You know, whenever the Fed makes a decision, it really does impact everybody. So most of us are either borrowers or savers. So if you're a borrower and the interest rates drop a bit, then you might see some relief when you go out to borrow money. So maybe a new car purchase or a used car purchase, or maybe it's an outstanding balance on a credit card. And yes, the interest rate is really high, but it'll come down a little bit. If you're a saver, you're not so happy when the Fed cuts interest rates because all of a sudden the interest rate you get on a savings account or a short-term CD or even a money market account, that interest rate will also go down. So that's where you feel it most specifically, borrowing and saving.
All right, so let's talk about inflation. Where is it headed? We know those recent inflation readings show that we're getting closer to the Fed's 2% target. That's the thing that they wanted to hit all this while. But is there a cause for concern about that core inflation ticking up a little bit?
So, okay, that core inflation is when we pull out food and energy, or as my friends like to say, oh, the only things I care about? Yes. And the core reading remains high because the cost of housing is high. So this is probably a lagging indicator, meaning that people don't renew their leases all at the same time, all the time. So we know that rents, year-over-year increases for rents across the country have been moving a little bit lower, so that's the good news. The bad news is that housing still eats up a big chunk of a family's budget. And I think that when we see that core rate tick up a little bit, it usually is because that housing part has not been pushed down. The Fed is looking through that. The Fed believes it's on track. But of course, the big unknown and the elephant in the room is that if there are tariffs that are actually enacted next year under the next Trump administration, it could push inflation rates higher. And in that case, the Fed may not be moving down a quarter point at every single meeting. They might kind of hold their horses and wait to see whether inflation, both the headline inflation and core inflation, whether they come down enough so that they can keep cutting.
Yeah, tariff talking causing a lot of people to talk today. So let's drill down on that. It's been a big week. New president just elected. Does the election result really lead to economic demand for inflation, or will this call for a different policy path?
I think the Fed's really going to be interested in seeing whether or not the Trump administration, or Trump administration number 2, is going to push these tariffs in the way that they did on the campaign trail. You know, now we're starting to see some of the folks inside of the transition team saying, oh, well, maybe it's just a starting point for a negotiation. But make no mistake, the Federal Reserve has a very specific job to maintain an interest rate that will allow the inflation rate come down to its target of around 2%, but also to make sure that the labor market is strong enough so that anyone who wants a job can get a job. If any part of the Trump administration's plans cause them to weigh one versus the other, they're going to shift their own policy. Monetary policy will shift. And right now, what we know about what has been said on the trail is that the Trump administration wants to fuel growth. Growth can often lead to inflation. Tariffs can lead to inflation, so we'll have to see what we end up with.
We await and we watch, but we know we've got you in our corner to explain it all. Jill Schlesinger, thank you so much. Nice to have this conversation with you.